Welcome to the Rich Auntie Podcast. Your host, Keia Valentin, will guide you on your journey to financial freedom, business success, and a luxurious lifestyle. Get ready for expert tips, inspiring stories, and practical advice to help you live your richest life. Let's dive in.
Welcome to another exciting episode of the Rich Auntie Podcast. And so I'm really excited about what we're about to talk about today. And so what if there was a way that you can build wealth? You could also access cash tax-free while leaving a legacy and also reducing your tax burden at the same time. Would you want to hear more? Okay, so that is what we're talking about today. We're going to talk about a powerful tax strategy by using a financial tool that many of us are very familiar with, but maybe we're not really familiar with how it all works together. Okay, so maybe we're not familiar with all of the parts of it, but that is whole life insurance. And so some of you may already have insurance policies. Maybe you are thinking about your beneficiaries and future generations. And so maybe you already have that in place. But today, what I'm going to talk about is how to use it in terms of a tax strategy. Okay, so why does this matter? Well, it matters because we have two significant drags on all of our wealth, right? And for many of us, that is debt. So, interest payments on those credit cards, the mortgage, what else? Loans, so many people, their wealth is being eroded by debt, but it's also being eroded by taxes. That's the second significant drag on your wealth. And so in terms of keeping more money in your pocket, if you could reduce or minimize, that tax drag or that debt drag, or if you could just eliminate it completely, then of course you're going to have more money in your pocket. And when you have more money, you can do more things with that. And so it's really significant to understand this tax strategy, how it works, and how you could implement it into your overall financial strategy. All right, so if you want an in-depth explanation of how all of this works, if you want illustrations and all of that stuff, I created a course called the Lifestyle Banking Course. It is a free course, and you could find it wherever you're listening to this right now. It should be in the show notes, or maybe the description, or maybe in my stories, check it out, because that link is going to give you access to my free course. And with that, you could learn everything we're talking about today, but more in depth. But for today's episode, we're just going to do an overview of this tax strategy and also just legacy building strategy as well. And so we're going to just go through a few points. That way, at least you could have a general understanding, and then you can just check out the Lifestyle Banking Course, and then you can go through it thoroughly. All right. So number one, let's talk about tax-free growth with using your whole life insurance policy. Now, many of you who have policies, or if you don't, you know that you pay a premium, right? Now, let's talk about what is a premium. So if you have term insurance, then your premium would go towards your death benefit. If you have whole life insurance, it will go towards your death benefit, but there's also a cash value component. Now, your premium, what it is just the amount that you pay, whether that's on a monthly basis, a biannually basis, annually basis, or quarterly basis. You get to choose, in which mode or how frequent you want to pay this premium. But that premium has two parts to it, right? With a whole life policy, it's going to have the death benefit part, which is the money that you leave to your heirs when you leave this earth. And then you also have the cash value part. And a lot of people, they think about insurance more for the death benefit. They don't really consider the cash values as much, but I can tell you the wealthy have been considering the cash values for a very long time. And so for some of you, this is going to be, we're going to open up a can of worms or Pandora's box, right? Because you're going to say, wow, I did not know I could do all of this with my life insurance. I thought that it was only for when I pass away. But we're going to talk about the tax-free growth right now and how that works. And so when you pay the premium, right, the portion that goes into your cash values, that grows tax-free. All right. Now we're talking about if you're in the US. All right, guys. Now that grows tax deferred, let's say tax deferred, because depending on how you access it will depend on whether you're taxed or not. So we'll say tax deferred for right now until we get into later parts, right? So the cash values grow tax deferred. Now, unlike traditional investments, you do not pay what we call capital gains on the growth, right? And, I even hate to compare life insurance to an investment because it is apples and oranges. They are not the same thing. I know many people, compare the two, but even though I'm talking about it in terms of the growth, I just want you to know that this is not an investment. If I had to liken it to another financial term or another financial tool, I would say it's more like a bank account more than anything that grows with interest. But the difference here is in a bank account, when you have a savings account, right, and you make money off of that, let's say that growth, the money you have in there, you will be taxed on that growth if it's in a traditional bank account, okay? Now, with a life insurance policy, on the other hand, when it grows in a life insurance policy, you are not taxed on that growth, okay? Because it is still classified as life insurance. It's not classified as an investment, if that makes sense, right? And so when you're compare it more to a savings account more than you compare it to an investment like stock or real estate. But what I'm saying is that on the growth, you do not pay taxes on that like you would, let's say, in a savings account or stock or a real estate investment. All right. So I hope that we are clear. Now, why is this beneficial, right? To be able to grow your money tax-free? Well, it's because your money gets to compound for you and have no tax drag or tax implications, right? Or tax interruptions, because we know that taxes is a significant drag on our income, on our wealth. So think about it like this. If you could grow your money and you did not have to pay taxes on any of it, would you be in a better position? Yes or yes? Okay. And so, yes, you would be in a better position. And so this allows your money to compound uninterrupted by taxes. Okay. Now, let me give you an example. Let's say, for example, you have $10,000 in your insurance policy, right? Let's say it grew by $10,000. Let's say your policy grew by $10,000 this year. That is the growth, right? You will not be taxed on that $10,000 of growth. So what does that mean? You have $10,000 that you now have access to, and it's your full $10,000, not after Uncle Sam takes a cut. Okay, you get to use the whole thing because it's tax deferred while it's growing. And then in the second part, we're going to transition into right now, you're going to be able to borrow it tax-free. All right, so let's talk about borrowing tax-free with policy loans. So many of you may be familiar with the infinite banking concept. If you're not, there's a book that you can read all about it. Or like I said, you could also just take my free course and learn about everything. I call it lifestyle banking. And I just like the name because, it encompasses your entire lifestyle. And so now you get to borrow this money, or let's say this $10,000 of growth tax-free, right? Now, instead of withdrawing from your policy, what you're going to do in order to access it tax-free is you're going to borrow from your policy. Because if you withdraw it, you're going to cause a taxable event. Whereas if you borrow it, then there's no taxes. So if you wanted to borrow that $10,000, all you do is borrow it and you pay no taxes on it. Now, this is a concept that I have implemented into my financial strategy over 10 years now. So I'm talking about this from experience. And not only do I help my clients implement the strategy, I use it for myself, and I've been using it for over a decade. And so as an entrepreneur, if you're a savvy entrepreneur, investor, or even if you're not any of those things, this can absolutely benefit you, because I mean, everybody can figure out, right? Or anybody could use, being able to have more money in their pockets. So it just makes sense. So the key benefits of doing this is borrowing from your own policy if you don't have any credit checks or approval. So if you wanted to borrow from the bank, they would have to put you through an entire process in order to borrow that money. When it comes to your insurance policy, you can borrow it, no questions asked. The insurance company does not care what you need it for. They don't care what you want to do with it, because at the end of the day, it's your money, right? And so the loan proceeds are not taxed as income. So for example, as you pull this money out and you use it as a loan, you're not taxed on it. Now, for my business owners, I will tell you this. If you withdraw it as a loan and you use it for business purposes, that can also be a tax write-off or tax deduction, okay? Speak to your CPA. I am not an accountant, okay? So make sure I speak to your CPA about it. Now, just like any other business expense, when you use this for your business, then you're able to write it off, because it is a business expense that you're using it for. You're not taking that money and going on vacation, okay? So keep that in mind. And your cash continues to grow, compounding, right? Now let's talk about, what do people borrow for? So in my case, I borrow for my business expenses. Some people borrow for real estate. I've borrowed for real estate as well from my policy, where I was able to take that money, put it into a real estate investment. Okay. So me personally, I like creating a plan around what I'm borrowing for. I'm not just pulling it out just to pull it out. I'm not pulling it out for vacations or to buy liabilities. All right. You're a part of this channel and you're listening to me now. And if you're one of my clients and you've ever worked with me, you know that I always tell you, if you're going to borrow from your policy, like, make it make sense, right? So as an entrepreneur, as an investor, or even as someone who's not any of these things, you can borrow, but just borrow with a plan, okay? And you get to do that tax-free. Now, what I love about borrowing from my policy is that even though I borrowed from it, and I know for some of you, when I say this, you are going to be like, what? Your brain may get a little scrambled as I say this, right? Because most people are not familiar with this aspect of how to use a whole life policy. And so when I say this, what I want you to do is just make sure you go through my course, because it's going to explain it step by step. And then you're going to say, oh, okay, Keia, I get it now. This is not magic, okay? This it's just numbers, and it's just the way this financial tool works. But when you pull it out of your policy, let's say you pull that $10,000 out, right, of growth, tax free, to use, let's say you wanted to purchase a car, or it could be a personal car, or it could be a car for your business. Even though you're borrowing that $10,000, even though you're taking it out of your policy, right? And I do quotations in the air for those of you who are listening to me on the podcast. That $10,000 is still in your policy, growing, compounding, tax-free. Now, I know some of you are going to say, but Keia, wait, so you're telling me if I have $10,000 in my policy and I borrow that $10,000, I still have $10,000 compounding and working for me? Yes, that's exactly what I'm telling you, okay? Because when you are, and I explain all of this in the course, right? But when you're borrowing that $10,000, you're not actually taking it out of your account. You're borrowing against it, okay? And what that means is you're leveraging that $10,000. And so that's how it works in a nutshell. But I would suggest, like I said, go through it, because then you get to see the numbers. You get to see real life explanations of people purchasing cars and case studies and all of that stuff. And so, yes, you can borrow from your policy and still have your money working for you. So now it's working 2 jobs simultaneously, right? It's purchasing that car, for example, but it's also growing for you. All right, so let's move on. So let's talk about passing on wealth tax-free. So this is where the death benefit comes in, right? And many people, this is what they use life insurance for. It's really for when they pass away and they want to leave a lump sum of cash to their heirs or their beneficiaries. And so your heirs get a lump sum, 100% of that death benefit, and it is tax-free. So that's the beautiful thing, right? It's not only do you get to use the money while you're alive and get to use it to fund your lifestyle, you also get to pass it on to your beneficiaries tax-free, which is a beautiful thing, because you also get to leave a legacy, right? That's a part of legacy building. And what I love even more is that you avoid probate. And we all know probate is a judicial process, whereas when you pass away and your family has to now go to the courts for them to decide how your estate will be divided up. Okay. Now, if you just have a will, and I know we're not talking about wills today, but let me just say, if all you have is a will, your family's going to have to go through probate. Okay. If you want to bypass that, then you can use a trust. But we're not talking about that today. What we're talking about is your life insurance policies. When you name someone as a beneficiary, it is able to bypass that probate process. Okay, so that saves your family a lot of time, and it also saves your family a lot of money. And so you could use this to fund your trust. So if you do have a trust, you can make the trust the beneficiary as well. So it does not have to go to an actual person. For example, let's say you have young kids like myself. You know, my kids are 9 and under. If I were to pass away today, they would not know what to do with that money. Okay. And another thing is the court would not give it to a minor anyway. They would still have to have someone there that is going to oversee that, right? Whether that be their dad or whoever. But that's what a trust is for, because now you can dictate who you want to oversee all of that. And so you could have the trust be the beneficiary if you have, you know, young kids like myself, or maybe your kids are not the most financially savvy. You know, we all know our kids, right? Some of them, you know, they may be little spenders. They'll go spend it all and live their best life. Okay. And maybe you're like, no, that's for college, or no, you need to use that for this. This is not for a night out. Okay. This is not for partying and being the person that goes in the bar and say, drinks on me, everybody. So everyone knows their kid or their young adult, right? Or even their grown adult children. We all know how they are. So maybe you want to create a trust so that you could kind of help them navigate, you know, through that process of getting a lump sum of money and not knowing what to deal with it. But the point here is, you can leave a legacy through your life insurance by the death benefit, right? And you could bypass probate to do that. Also, for those of you who are in business as well, if you have a business partner and you're thinking about like business succession, like in the event that one of the partners passed away, you know, making sure that you either have a life insurance policy, you could buy that partner out. Let's say if you want your family or your family to be the one that continues to operate the business, or you could provide cash to that business as well through the death benefit, because losing you would be a significant financial blow. And your partner by themselves may not be able to continue to maintain this business, right? And so when you're thinking about your business succession as well as your family succession, life insurance plays a part in that also. Okay, so I hope you guys are following me. So so life insurance ensures that your family or your business partners inherits this money tax-free. So let's talk about using life insurance for tax-free retirement. Now, those of you who know me, you know how I feel about retirement, right? I I I really detest that word. And this was not something, and let me explain why, for those who are just listening to this episode, and this is the first time you have come into contact with me, right? The reason I don't like it is because it actually is a new concept where we retire, right? And that's not something that was a thing. Because what I think about retirement is you should retire into your purpose or into creating more value in the world. And don't get me wrong, if you want to retire and just drink margaritas on the beach all day and relax, I ain't mad at you, okay? I'm not judging here. We listen, but we don't judge, right? But what I'm saying is that if you're someone that is continuing to grow, you want to continue to be of service, and you want to continue to be of value in the world, then you should retire into your purpose. You should find out what is the contribution. Like, maybe you did the 9 to 5 thing, all your life, and now you're like, I'm just ready to retire and get rid of this job. Yes, retire that, but then go and find out what it is that you love. So that's how I look at retirement. And so I'm not saying don't just live your best life. But what I'm saying is, for those of you who want to create more value, then retire into your purpose, like figure out what that is. And so let's talk about 401ks and IRAs, because I know that that is how most people think about retirement. That's the extent to which they think about it. They're like, okay, if I put enough money in my 401k, or I put enough money in my IRA, I should be good, right? Okay, let's look at past generations. How is that working out for them? Not very well. I'm just saying. And so the thing about 401ks and IRAs is you cannot control what's happening in the economy at that time. And those things, they go through volatility. They are dependent on the market. And so what happens is, what if you had to retire during the time when there was a pandemic? And give me 1 second, guys. All right. So what if you had to retire during a time when the pandemic happened, right? Your IRA and your 401k was not looking good. You may have said to yourself, you know what? I think I'm going to have to stay at this job a little bit longer, or I need to find a second job in order to, keep on with my lifestyle, in order to keep up with how I want to live. And so, what I do love about using an insurance policy, a whole life insurance policy from a mutual insurance company, is that your money is it's not affected by market volatility. Does not matter what's going on in the world. Does not matter what the economy, the wider economy or global economy is looking like. Your personal economy can definitely still be intact. You still have complete control over your personal economy. And that is very important. So you could access cash without creating taxable events as well. All right. So it avoids IRS penalties also, with a 401k IRAs. When you take early distributions, right? Like, you want to access it early, you're going to pay a penalty. That's just the way the system is set up. And so for me, I don't like the fact that I can't access my money at any time. And if I do decide that I want to access it, that I'm now taxed or given a penalty for that. And so what I do love is that you have the ability to access your money anytime you like. And, you don't have to deal with any penalties. And then also, you don't have to deal with any taxable withdrawals. All right, any taxable withdrawals. So, guys, I am here, and I don't know if you guys hear my kids with the cereal pouring in the background and all of that stuff, but I'm telling them, like, please go upstairs. Let me do what I have to do. All right. That's the life of a mom, right? Okay, so far we talked about the tax-free growth. We talked about withdrawals. We talked about retirement income. Now let's talk about how do you get started. If you wanted to set up a policy and you wanted to use it for all of these reasons to limit your tax burden or minimize your tax burden or just completely get rid of it, period, on your tax-free growth, right? Then your next steps will be number one, to work with a knowledgeable insurance agent. And not all whole life policies are structured for wealth building. That is something you have to keep in mind. So you need to work with a professional. For many of my clients, we design their policies based on wealth building, not based on just leaving money to their heirs, okay? But actually wealth building while they're alive, being able to grow that wealth and for them to be able to use it while they are still in the land of the living. Because I know I hear people sometimes they say that they are, insurance poor, meaning that they have all this money when they die that's going to their heirs, but they have none of it while they're alive. That's not how we want to live our lives, okay? You should always be thinking about your beneficiaries and your future generations, yes, but you still got to think about yourself at the same time. So, you should always think about strategies that allow you to live your life today, where you don't have to defer your lifestyle, number one, where you could still take those vacations, where you could still live your best life, but you're still being a good steward of your wealth. You're still thinking about your future generations, because, the good book says, leave an inheritance for your children's children like a wise man or woman, right? And no matter what your religious beliefs are, that's what I believe, okay? And so I do believe that building generational wealth is something that is critical to and when I say wealth, I don't just mean financial wealth, but even just a wealth of knowledge, a wealth in how to navigate this world, right, is very important. So first of all, get with a knowledgeable insurance agent. Second, determine the right premium contributions. Like, of course, the bigger your premiums are, the more cash values you build faster. However, everyone is in a different financial state, right? And so that's why it's important to talk to a professional, because you probably don't want to overdo it when you first get started, right? You want to be able to do it in a way where it's within your limits, yes, but also it works and it flows with your lifestyle, if that makes sense. Higher contributions do build higher cash values, though. And use policy loans strategically. That's the third step. Do not just borrow from your policy to buy a bag or, I don't know, sneakers, or I don't know, whatever liabilities you want to buy in your life. Now, don't get me wrong. You could still buy those things, but I wouldn't use my insurance policy to do that. You could just use your cash to do that. That's outside of your policy if you want to, right? But when I think about using the loan strategically, this is, let's say you want to start a business. You want to purchase your first home. You want to purchase a car. You have, let's say, a course you wanted to take, right? Because all of these things pay dividends, right? In some way, shape, or form. If you use it for a course, it may not pay you financially right there, but you're leveling up your skill set, right? If you're purchasing a car, you need to get around. So maybe it's going to pay you out on the back end, and not only even just thinking about the things you want to purchase for yourself, but also for your kids, right? For example, you can use it to purchase your kids' first car or their first home or whatever the case may be. And I talk about all this in my course as well. And I give you even more ideas of how this can work. And I also give you examples of how it works for our family presently, and also what that looks like in the future once our kids get to adult age and what that looks like for them, whether that's funding different things they want to do, also whether that's just leaving a legacy, and how all of that works. So I talk a lot about so many different things. And the last step is review your policy annually. every year, at the minimum, you should be getting with your agent and you should be reviewing it, okay? Because your life changes. Life is not a static thing. It does not stay the same. It is constantly changing. You're constantly evolving. One day you're single, the next day you're married, the next day you have kids, you may get divorced, your kids may have you may have grandkids. Like, all of these things are happening in life, right? And so your insurance policy should be something that is also taking on that growth as well. And so you could adjust coverage as your wealth grows. And I don't know about you, but I always look at it as, I'm going to be wealthier in the future than I am today. I hope that's how we're all thinking, right? Wherever you are today, I'm hoping that you know that you're going to be better off tomorrow. And the first step is obviously just having financial education and being proactive. All right, so let's do a quick recap. So the wealthy, right? We do not just buy insurance for protection. We're using it to build tax-free wealth, all right, because that's important. The less taxes you pay, the more money you keep, the more things you can do, the more impacts you can make. And so that's how I look at it, right? And whole life insurance is not just about leaving money to your heirs. It's also about keeping more of that money while you're still alive. So always keep that in mind as well. You should always be doing both at the same time, so simultaneously. And so I hope that you got a lot of value today. And I hope that this opened your mind to the possibilities of what's possible. And so I love sharing about different financial strategies. And I always come from a place of experience, because I love to share things with people that I've experienced or I've been a part of, because that's just important to me. And like I said, this concept I've used for over a decade now, and it's been very beneficial to me and my family. And so I will say this, it can be for everyone, but for some people, when I see them, let's say, for example, I sit down for a consultation, depending on where you are in your life, this may not be your first step financially, okay? You may need to take another step before you get to this point, or maybe 2 steps before you get to this point. But as long as you have a plan and you have a vision, and you believe that you're going to be wealthier tomorrow than you are today, and you're taking the necessary actions to get to that point, we could build you out a roadmap. But what I'm saying is, even though this can be for everyone, you'll see in the course that you may look at yourself and say, okay, maybe I'm not there right now, but I eventually want to get there. All right. So check out my lifestyle banking course. That's the next steps, the next things that you need to do. If you want to book me for a consultation, if you want to just see how this fits for you, I would say check out the course first and then book a consultation with me. Because when you come to me, you're coming with more knowledge, you're coming with more information, and your questions are more, you thought about them more, right? And so you know exactly what it is that you need to know in order to make a decision of whether or not this is something you want to implement into your financial strategy. And share this episode with anyone who needs to hear it. Like I said, this is great if you're just thinking about all of your personal expenses, homes, cars, all of that stuff. And it's also great for my savvy investors and entrepreneurs, whether you're investing in real estate, whether you're investing in stocks, whether you're investing in whatever you're investing in. What this can do is help to accelerate those investments. And now you have your money working multiple ways at the same time. And so I also go over that in the course as well. And so I hope that this episode has been beneficial. Today, we talked about how to use life insurance to reduce your tax burden. And we all know if we reduce our taxes, we get to keep more money in our pocket. And so continue to grow wealthy in mind, body, and spirit. This is your favorite Rich Auntie signing out. Y'all have a wonderful day and God bless.
Thanks for listening to the Rich Auntie Podcast. If you enjoyed this episode, be sure to subscribe, rate, and leave a review. Follow us on social media for more tips and exclusive content. Until next time, keep shining, keep thriving, and remember, you deserve to live your richest life.